Good morning, everyone. Good afternoon and good evening. Welcome to our webinar about AI and financial crime. My name is Irene Dravilla. I'm the Product Marketing Lead at Temenos for Financial Crime Mitigation, Payments, and AI. And I'm here today with two of our experts, Adam Gable, who has a deep expertise in the banking industry, and Peter Banham, an experienced professional in risk and financial crime mitigation. Also, I would like to thank ABA for hosting this webinar. As an ABA associate member, Temenos would like to help you today through this webinar to explore how artificial intelligence and technology can actually work together to fight financial crime and give benefits for banks. So let me start by giving you a bit of a context about the environment of the market. Payments volumes across the world are growing, specifically in APAC region. They're increasing rapidly, especially across real-time payments, QR payments, and cross-border flows. At the same time, digital wallets are accelerating transaction speed and are creating new fraud and AML monitor challenges. The industry is now moving towards a real-time world, 24/7, 365, and instant payments are setting higher customers' expectations. Regulatory scrutiny is getting more tighter, and regulators are becoming more demanded, and that differs across the different regions of the different markets across APAC, while at the same time, AI-savvy criminals are becoming increasingly sophisticated. They're faster, it's harder for us to detect them, and especially in scam and new account ecosystems and across cross-border networks. Within this context, the traditional approaches we were following so far were simply not enough. The use of AI is something that is a mandate. It's not longer a nice to have thing. It is a necessity, a strategic necessity. And today, this is what we will discuss. This is why our discussion is so important. During this webinar for the next 1 hour, we will help you understand what is the right combination between human expertise and AI-powered tools to help banks and financial institutions like yours to outperform in this space. We will discuss how AI is actually reshaping the way we're doing business and helping you to detect, prevent, and respond to such criminal activities. This is an open discussion. This is a live session. If you have any questions, drop them in the Q&A box. And after we will finish our discussion with Adam and Peter, we will try to address all of them. So at this point, I need to stop talking and introduce our panelists. Adam, would you like to introduce yourself?
Good morning, Irene, and good morning, everybody. Pleasure to be here from a sunny London town. My name's Adam Gable. I'm a Senior Product Director at Temenos. I look after enterprise products, so those are products that sit across the enterprise and not necessarily segment-centric. So things like payments, reg and compliance, and financial crime mitigation is a big and important piece of my portfolio. My background is banking, worked for a number of international banks. I just remembered I worked for a couple of Asian banks, if that's relevant. Moved to the software industry scarily about 20 years ago, since whence I've taken positions of progressive responsibility, building and taking to market specialist and core banking systems. At Temenos, my responsibility is ensuring our products are competitive, delivering client value, and growing in that target market. Real pleasure to be here. I think this is a really interesting topic, and I'm hopeful we've got some interesting learnings to impart to the audience.
Thank you, Adam. Peter, over to you.
Thanks, Irene. It's good to meet you all. I'm Peter Banham. I'm the Director of Product Strategy for Financial Crime Mitigation and Risk at Temenos. Like Adam, my background is from investment banking, but what really got me up in the morning was solving problems with software, and I moved into software about the same time as Adam, about 20 years ago. But key being, I spent most of my younger life in Hong Kong, growing up in Asia, so it's nice to be back in certain ways. Thank you very much.
Perfect. So now that we met our two experts, let's start the discussion. And Adam, I would like to start with you. I've done a brief introduction about the market that is rapidly changing, but I would like to see from your expert lenses the market landscape. What is changing in the market globally and specifically in APAC, and what do banks need to do in order to compete in this financial crime space?
Yeah, thanks, Irene. I'll zoom out. I work in product at Temenos. We're a leading banking software company. We'd like to say the leading, but that might be slightly biased. But we have over 1,000 clients relying on our software for the major part of their business, and across 140 countries. And one of the privileges of that is that we get to look at and speak to that client base, the market and prospects. And what we're observing as we look at that market is the battleground is really changing. If you think about, the top 50 fastest growing financial institutions, they're all pure play digital. Even if you compare the top 20 traditional banks versus the top 20 fintechs, the top 20 fintechs have got nearly double the customer base. Now, you can argue if that's primary accounts and what kind of financial services they're offering, but what's very clear is the direction of travel is one way. It's pure play digital. So what that means is when customers are looking for their products or they're looking for their financial service, brand becomes all important. Experience that brand being the brand of the product, the brand they feel comfortable with, and equally when they're looking for that great experience, they're looking for fast, convenient, friction-free service. And then you can add, as traditional banks are competing with those pure play fintechs that start from the ground up, are very lean, running on very high return on equity, 18% return on equity versus many banks, single figures, efficiency becomes a key factor. And in fact, if you add on to that the shifting demographics of Gen Z and Gen Alphas now come online, the thought of going into a bank branch becomes quite an anathema. They're digital natives. They're looking for the product they like, the experience, and from a banking perspective, the banks need to drive efficiency in that play. What that does, that really elevates financial crime or financial crime mitigation, because when you're looking at the brand, protecting that reputation and protecting customers becomes all important. When you're thinking about that great customer experience end to end, delivering that fast, convenient, safe experience becomes all important. And then when you're thinking about efficiency, cost of compliance makes a big chunk of operational spend. Some 6-7% of income on average. So driving down that cost of compliance becomes critical. So, the way Temenos look at financial crime mitigation is that really, whilst banks' customers have choice, they can now go and choose their financial product and financial services. Banks don't have choice. They need accurate FCM systems that run throughput and run efficiently. So in short, we believe banks need access to smart, modern financial crime mitigation software, which improves throughput and accuracy whilst containing costs and without compromising service or protection. That's the big macro level. I think it's worth digging a bit deeper now, Irene, into the financial crime specifics.
Yeah. Thank you. Thank you, Adam. I'm going to go to Peter now, and not only on financial crime specifics, but I'm going to touch another point, which is the real-time payments. So, Peter, APAC leads the world in real-time payments with UPI, Pay Now, QR ecosystems, creating a lot of challenges. So, I would like you to explain us and give us to help us understand what are the main industry challenges that you see in this new environment.
Thanks, Irene. So I'm an ocean sailor, and we all hear this phrase all the time on television, a perfect storm. And so as a sailor, sometimes I don't feel comfortable about it. It's overused, but I do think that maybe this time we have got that. So that's about multiple factors coming together that individually wouldn't make a terrible thing, but together they do. And volumes, regulatory scrutiny, and the frequency of change, they're coming together now, and all the pressure is coming on compliance. So if you look at the top left of that screen, the sanctions list, they're growing. They're getting updated far more regularly. I mean, I can think back to years ago where sanctions lists were updated, say, monthly, and then it became weekly. Now we're talking about possibly intraday, and having intraday updates to your sanctions list is now becoming a common thing. So that's far more frequent than it ever used to be. Now, volumes, the bottom left, 270% increase in real-time payment volumes, but that's just going to grow and grow and grow. So that brings in operational pressure, and then as well as that, it's not just the volumes are growing, the speed of them is happening really far quicker than it ever used to. So you've got real-time payments, instant payments, or faster payments. Depends what part of the world you're in. It means exactly the same thing. But this is now going to include cross-border payments. So cross-border transfers are also going to have to be executed in a far faster fashion. The G20 want to move to an hour by 2027. I personally think it's probably delayed, but that's coming, and we need to realize that all of those things increase pressures on each compliance team. They've got to be faster, deal with bigger volumes, and they've got more frequency, not just of the sanctions list, for example, updating, but also the frequency of the regulators coming through the door and looking at what they're doing. So all of that means that there's going to be an increase in compliance costs, and not surprisingly, in the middle, 95% of the institutions that were looked at in one of the recent regulatory investigations, 95% think that the costs are going to go up. 2/3 of institutions think they're going to have to update their financial crime systems within the next 3 years. That doesn't surprise us at all. And then the final piece on the right, you've got to do all of that. And if you're in financial crime, you've got to do it with less costs all the time. There's a pressure on reducing the costs. The problem is costs in financial crime. Generally, if you look at it, 60% of those costs are people. It's not machines. It's not software. It's people in most cases. And I think the key piece for me is the bottom, right? So what happened originally, you all saw it. So basically the regulators were fining banks. They were fining large banks, but they were fining them mega fines. We saw billions of dollars worth of fines to small numbers in institutions, so 5 to 10 roughly, for the first sort of 5 years of the main pressure on these regulatory fines. But in 2025, that completely changed. And suddenly we had a situation where more than 200, close to 250 institutions got regulatory fines during 2025. In APAC alone, for example, you bucked the trend, ironically, that whilst the fines amounts were going down, in APAC they rose, 44% rise in penalties in 2025. That's a significant increase. So one of the things we could do to mitigate all of this, obviously, is what the main topic today. So we're going to talk about what's the greatest way to mitigate against these risks and costs, and really highlighting the use of AI in order to deal with this perfect storm.
The use of AI in order to mitigate this perfect storm. So I'm hearing from you that there are a lot of costs, a lot of pressures, compliance challenges. So what is the solution for all this AI appetite? How can AI help in order to mitigate this situation?
So there's a number of different areas that institutions could use AI. I mean, the first one would normally be, and this piece of research, phones to it. It's your community and showing the appetite for AI. So this was done by a Temenos investigation along with Hanover, and we're asking institutions where they focus their AI. And not surprisingly, operational efficiency, it's top. It's the first thing everybody thinks about. And the reason they think about it is about lowering costs. lowering costs and automating repetitive high volume tasks across the entire banking framework. All right. But the problem with that is you want to use AI to absorb complexity, but you also have to allow humans to shift to higher value activities. Protecting customers, that's obviously key. And given the topic today and compliance, that's what drives me every day, right? We've got to protect our customers and you've got to protect yours. So we can use AI to help prevent this harm. The key thing is you've got to improve trust, right? That's what it's all about, trust. And you've got to look at how we can proactively use AI to prevent the detraction of that trust, and how we can use AI to ensure that we are keeping our barriers up. Now, these first two, ironically, if you look at those first two and the percentage that you're talking about, sort of, 75 to 80% in those first two pieces, those are probably the main areas, both operational efficiency and protecting customers, that apply to a financial crime team. The other parts of it sort of apply as minorly, but across the rest of the institution as well. So you've got analytics, which you can imagine, transforming data, getting your reports better, no matter what team you're in. But in financial crime, the analytics and reporting is vital. Looking at your throughputs and so on. Integration where you're trying to scale the bank's existing technology rather than say installing new technology or AI core to do things like that. And then market agility being the last piece. All right. From that, it's about how can a bank adapt and innovate and respond quickly to changes in regulation and to customer changes. But what I've talked about here is the appetite for AI. Now, that's a family of tools, an umbrella term. And what we need to think about is, well, what are the different flavors of AI and how can they be used in the different areas?
On that exactly is where I will bring Adam to help us understand more. So all this pressure that you just explained are happening in the market and are making AI a game changer and a major disruptor in the market, especially nowadays. And as you said, there are many ways to leverage it. So Adam, most of us, if not all of us, we do have an AI experience so far. A ChatGPT, a Microsoft Copilot chat box that we have used in order to do our life easier. But can you please answer what just Peter said? Can you give us an overview of the AI family and the different components so that everybody in this webinar can understand what are we talking when we say AI? It's not one thing only.
Yeah, thanks, Irene. I think it's very interesting. As Peter mentioned, AI is not new. We've been using algorithms that many were written in the 70s, but really only came into their own when we had commoditized compute power and big data to do machine learning on. And I guess as a technologist, again, we've been using what we would call AI, machine learning, for some time. K-means clustering for peer grouping, machine learning for neural networks, linear regression for anomaly detection, Bayesian inference for skipping and circumvention. And that's exactly as was said, is a tool and technique that we've used as appropriate in the value chain. I think what you're alluding to is kind of this, if you like, modern AI, this ground shift that really occurred a couple of years ago. ChatGPT 4, the latest versions of Claude, really changed the game from that early large language model concept, that many to relationship that's able to produce content, to something that's become suddenly very accurate and very meaningful. And we're seeing a plethora of use cases around that type of AI, not least embedding that into agents that can actually manage an end-to-end part of the value chain, in our case, the financial crime value chain. And we see that across, it might be report generation, it might be helping investigators, it might be reducing false positives. But going back to what I said in the outset, I mean, two things I would say is, one, is just that, as Peter said, there is an appetite, and people recognize the value of these things. But right now, what we're seeing is kind of the edge cases, I think, again, as you just alluded to, that are really getting traction. So people will use a co-pilot. They'll use a co-pilot to help them write an email. They'll use a co-pilot to, help them create a document. But that real-world application within the banking value chain, we're seeing less real-world cases yet. And I think the reason for that is the bars for using AI are quite high. Regulators set that bar very high. And then you can add on to that the fact that we're operating in the compliance space where decisions need to be explainable and um, 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 audited for your bank, for your regulator. So I think I would summarize that there's many types of AI. Gen AI has really changed the game in terms of what's possible. There is an appetite, as we see that from our study, there is an appetite, but as yet, we're not really seeing the traction. I think the biggest challenge for that becomes from we're bankers, we're risk averse, and we equally recognize that the bars are high in terms of the real world application of these tools and techniques. Yeah.
You mentioned regulators and the explainability and the transparency that banks needs to have to the regulations, to the regulators. If we go to the APAC region now, Monetary Authority of Singapore, Hong Kong Monetary Authority, Australian Transaction Reports and Analysis Center, and other regulators are explicitly encouraging AI adoption. And at the same time, they're demanding what you said, transparency, explainability, audit trails, human accountability. And this is happening in this region much earlier compared to the rest of the world. And actually, the two first regulators are moving from principles to evidence-based AI supervision. Do you have any real-world examples of how this transparency that regulators are requesting from banks can be met?
Yeah, I mean, firstly, it's worth acknowledging the Asia Pac region tends to be technically quite advanced. I'm not surprised that regulators there are proactive in encouraging the use of these tools and techniques. And again, it's an acknowledgement of the value that they can add. Listen, to talk about an example, maybe at the risk of being slightly, parochial. Um, I'll talk a bit about how Temenos have adopted AI to surmount some of those hurdles, some of those barriers. So again, to talk about real world application versus theory and kind of edge cases, I'll refer to our FCM AI agent. Now, this agent is designed for reducing false positives in sanction screening. So really at the heart of the compliance ecosystem and making very critical decisions on whether money flows to sanctioned individuals or not, and equally any decision that this makes has to be super accurate and very clear and very explainable. So the way we've approached this is, if you like, in three modes. The first is a listening mode, where the bank can switch on the agent. The agent is active, it's making decisions, but it's not taking action. So from that, in that mode, our clients can make a comparison between the decisions the agent is making and the decisions the human is making. And only when they get comfortable can they switch to the next mode, which is advisory mode, where the agent still makes decisions, but it puts a human in the loop to receive the prediction from the AI with the explainability as to why it's making its decision, with a confidence level of that decision, and then very quickly the human operator is able to use that to make a faster decision, supported by the evidence the agent provides. And then the final mode there is the fully automated mode. So what our customers or clients are able to do is they get confident, is at a very fine grained level, switch on STP so that when that agent makes a decision, it can actually take the action The bank can control that as they get confident, and as I said, to a very fine-grained level based on maybe the type of payment message that's being adjudicated, the confidence level that's coming from the agent, or it could even be the algorithm that's created the match that enables them to control how much STP gets implemented or invoked. And underneath that is full explainability, just to go back to that kind of initial concept, in as much as all of those decisions, as the agent is making that decision, it's recording why it's made that decision clearly with a confidence factor that gets stamped on the record, so that at any point in this life cycle, people can see why that decision was made. And of course, importantly, the bank's auditors can see why that decision was made, but the regulator can see why that decision was made. So it might be 3 months, 6 months, a year later, someone comes to ask questions. You've got clear transparency of why actions have taken. And going back to what I was talking about earlier, where we say, regulators have got that high bar. They need to see non-bias. They need to see fairness in the implementation of AI. In the compliance space, they need to see explainability. So it's those factors, the modes that give confidence, the explainability, the fairness that equally comes with the transparency that enables regulators to say, look, this is okay to use. And they're happy to say that, because they're keen to see these tools used in our industry, where we're all conscious that scale, as Peter pointed earlier, faster payments, increasing volume, shorter time to make checks. So where regulators, are keen to see that these tools are implemented and adding value, and moreover, safety.
Safety. You're right. Thank you, Adam. That was very, very clear and comprehensive. But what we have heard so far from both of you is the positive side of the story, how actually AI is helping technology in order to mitigate risk. But there is the other side as well, the side that the criminals are working with technology and AI to become themselves smarter and more sophisticated. So, Peter, I'm coming back to you, and I would like you to explain us how bad actors can take advantage of the AI technology for their own benefit, for their own sake.
Thanks, Irene. So, as Adam said a little while ago, actually, there's the real world application of these technologies, but it's not just limited to the good guys. Obviously the bad actors have it as well, just as we've seen with all sorts of technology all over the world. So how are bad actors going to use this? Well, they're going to scale their operations just the same as the banks are trying to scale using the same tools. They can increase their speed, and there's a cost element to what they're doing as well, people and costs. And so those are going to be lower. They're going to see efficiency gains. They're going to be able to execute money laundering, fraud, and evasion in a far, far larger scale. Right. So they can use AI now to generate synthetic identities. I think that's something that we see more and more of now. Fake IDs are coming at scale. Their addresses. They can use deep face selfies even. And the problem of mule accounts and the ability to launder money through particularly cross borders is going to now happen at scale. All right. They can use machine learning to simulate transaction patterns. So they could set up thousands of accounts and set up automated payments across all of those accounts, create a network of payments that for months and months and months is perfectly normal. And then they'll start gradually increasing and injecting the payments that we all want to stop. So the problem is that used to take enormous amounts of people, an enormous amount of time and effort, and building and layering and structuring all of those funds through their different payment systems. That can now be handled, by AI agents and by bots, and to do automatically. And the problem with that is what used to take criminals months and months to set up and run is now taking weeks, if not days, to be honest. And it's hidden through what we would all struggle to see from a customer activity perspective. And the thing is, the criminals, they've only got to succeed in a proportion of their time. Then don't have to get it right all the time. But as institutions, when we're on the defense against this attack, we got to get it right every time. There will be mistakes and there will be things missed, but sadly now you could almost guarantee that the auditors or the regulators, when they come in to do their checks, they're going to find it. They're going to find that needle in the haystack. And we've got to make sure and help all of our clients to find those needles as quickly as possible and as effectively as possible. Now, finding the needle in the haystack is that classic phrase that you hear all the time. It's about false positives. And the challenge is now, because the money is and these flows and the fraudulent activities are so well hidden, you're going to have to look at the tolerances and that you're setting, and there's going to be a load more edge cases. And with the volumes that you're talking about, you're going to have to find a way to get down and get rid of the noise in order to detect the true positives amongst that very large amount of noise of false positives.
Reducing false positives is really a long-standing goal for banks. And can you please explain a bit further on that? Can we please deep dive on that? Where do you see cases where AI and specifically agentic AI can do a material difference? And where is the point that banks should be really cautious about it?
So the thing with let's stick with just this one point of false positives for a moment. The thing with false positives is, as an institution, you want to look for risk. You're looking for your risk and you're trying to balance the risk against your customer satisfaction. So that's a pendulum effect. So we could, if you look on the right hand side of that screen, so we could work with our clients and make them very, very risk averse, and we could detect almost every single case where the fraudulent or money laundering activities or suspicious activities were occurring. But the problem with that is, in order to do that, you're probably going to really detrimentally impact your level of customer satisfaction. We've all had it. Everybody's had the little text to say, was this payment executed by you? And in the past, people were getting very annoyed about it. There's a lot more acceptance that your institution trying to protect you now. But that's pendulum swing that is occurring from the level of risk to the level of customer satisfaction is where we've got to help our clients find the balance. The thing is, the regulatory scrutiny is not going to reduce. If anything, it's going to increase. And so whilst trying to balance that risk versus customer satisfaction pendulum, you're also going to have to satisfy the regulators to show that you are doing everything you can in order to both protect your customers, protect your institution, but also meet the regulatory requirements. In order to do that, you need to explain every single decision, particularly on the edge cases. And that's where you've got to Irene, to your point about where's AI coming in that second point, explainability. You're gonna need to have a way to understand why you either stopped something from going through or why you let something go through that possibly looked a little bit suspicious. Balancing that, you've got a zero tolerance for errors. In some places, you cannot let those go through. So there's all of those pieces to balance up, and then the human in the loop design that we're talking about here. So most institutions now, or most regulators, require there to be a human in the loop, and you need to actually be very sure that the humans are there when the decision's being taken that would detrimentally affect you or I. And then there's, as we said right at the beginning of this, there's a trade-off, and the trade-off, false positives, false negatives, happens all the time. What we need to do is help our clients get that false positives level down to the point that they can manage what's left and inject some kind of semblance of normality into the business flows. So if you look at the industry levels, you're talking about, and this is from external data, but 6% is about the level of false positives that you have in your payments flow. It can be as high as 12. I've seen as high as 12% in some places. What we try to do from a Temenos perspective, just from a normal, payment screening perspective, we travel at somewhere between 2 and 3% with our tuned engines, without the use of AI at all. And that, in order, from our perspective, helps our clients have a manageable process through normal everyday activities. But once you introduce AI, you're talking about the gains that you get at that point when you're talking about, certainly when you're talking about the high volumes that we talked right at the beginning about volumes going up. Once you put AI in, we've got our main tier one first client live with this. Day one, they experience a 25% reduction from what was already a low false positives rate, a 25% reduction in their false positives rate on day one. And they've got a target to get that to 40 to 50% reduction by the end of the year. And that can make significant differences when you're talking about the volumes that we are.
Reduction of false positive is very important, but I would like now, Peter, to deep dive on a factor that you mentioned. We can see in the slide that 60% of the financial crime compliance is cost of people. And I would like us to touch this element of the human factors, because I think that's the biggest worry and the thing that we need to analyze for our audience today. So where exactly do you draw the line between fully autonomous and human oversight? And what are the decisions that should an AI agent never make alone? You said previously that regulators demand that there is an oversight from the human, from humans on the end decision. Where do we stand with that? Where we are?
Yeah, that's the topic of the day, isn't it? Humans and
Mm.
AI. I think compliance is possibly slightly different to some of the other areas, that certainly in banking and the rest of the world. But when you look at it, regulators don't draw a line between AI and humans from a decision perspective. They're just looking at what decision was taken, not by either a human or an engine. But when you look at it, the regulatory principle is you can't delegate your responsibility. All right. And that means you can't delegate your responsibility to a machine. You can't say, oh, well, it wasn't one of my team, it was the machine. That doesn't work. Humans and the chief compliance officer, particularly, you're going to remain accountable. So it's just another one of your team, right? So this AI bot or AI agent that you've got running, or agents running in the background, you're responsible for them just as you are for all of that team that you currently sit and look at every single day. So regulators are accepting that AI is going to operate, and it's going to operate autonomously, but it generally needs to be seen that it's probably more in a low risk procedural area. And one of the expressions that was used recently to me was, we use AI where the activity could be reversible. So a human could go in and reverse a decision that the AI agent made, and the humans need to retain authority over these. And if there's going to be a high impact, or if it, in fact, as I said a few minutes ago, if it affects the rights of a human, or if there's a judgment-based decision, mostly those are undertaken by humans. So I think, Irene, to your point, you're saying, where would AI stop, and where would we not use it possibly? Detections are one of areas. If we think about detection and reporting and operational pieces, you can make AI cannot materially affect a human's activity. So it can't, for example, you can't allow AI to stop one of my payments. If it negatively impacts me as an individual, it mustn't be allowed to stop that. A human has to be in the loop when you negatively impact another human. So, for example, rejecting onboarding decisions, loan approvals, and so on. If that happens, a human must be involved in it. AI shouldn't make decisions. So the reporting piece, there's three pieces. The AI shouldn't make a decision to file or not file, say, SAR, a suspicious activity report. An agent shouldn't be allowed to interpret regulatory breaches, for example. So all of those things can't be handled by AI and shouldn't be handled by AI. And then obviously, if you're going to do operational controls, you've got AML, thresholds, false positive tolerances, and things like that. You can't allow AI to do that. You must always have humans in the loop when you talk about those three pieces that I mentioned.
Very clear, Peter. Humans needs to be in the loop. Adam, I'm going to come to you in order to have one final question, which is very important. Many banks are starting their AI journey now. However, sometimes there's a lot of activity and little valuable outcome, which means that how can we measure, can we see the AI impact to avoid doubts? How can we measure what AI can provide? And are there any use cases of what we can benefit and what banks can benefit from the modern AI techniques that you just explained earlier?
Yeah, there are lots of use cases. And there are lots of ways that banks can benefit. We've already touched upon the fact that although there's an acknowledgement of that, there's less take up. And sometimes it's not so easy to measure the upfront, the ROI. Interestingly, I watched or listened to a podcast the other day where Jamie Dimon, the CEO of JP Morgan, was saying he's spending 20 billion on technology. A big chunk of that in his enthusiasm to benefit from AI. But even he at that time was acknowledging that he's not quite clear now at this point in time where that return comes from. He has a very strong conviction that there will be return, but that's harder to show early on. Listen, we've been doing this for a while. My kind of advice to anyone thinking about this, other than come and speak to Temenos, is to be intentional, to think about your use case, pick your use case, and then there are other things you need to think about to mobilize. One is data. Where is that data? Is that data accessible? Is it in the right place? Has it been normalized? All of those things. The one good thing that we see Agentic AI is able to cope with more than traditional AI is unstructured data, but nonetheless, data needs to be accessible, it needs to be in the right place, and you need enough of that data, is the first thing. And then the other things I think we've spoken about here really is very early on in that project, think about that path to life, because as much as you want to show the return on investment and the true monetary value of your development, you're not going to get live unless you're able to show with confidence that this is safe. This is safe, fair, explainable. So very early on, I would encourage people to start thinking about that path to live and what are the steps to get there. I use the Temenos example where we have that kind of listening mode. It's almost a shadow in the background operating, not taking actions, to then that ability to bring a human in the loop, as Peter's just described, critical for some decisions, less critical for others, which is where you can get STP benefits. And then finally, just where you do allow the agent to make decisions, and there are places you can, and that's where you get real value and really, enable your business to scale and to drive efficiency. You really need to think early on about that explainability. Do you know why decisions are made? Can you record that? Can you make that transparent enough that it's acceptable to your stakeholders and regulators? And then the use case. I mean, so that's my advice. Be intentional. Pick your use case. Think very early on about the safety value of this and the regulator's viewpoint. But then in terms of actual use cases, I mean, there are a plethora. I mean, this is our own kind of view of the world as we look at that financial crime compliance landscape, and we see use cases through transaction screening, as Peter has said, around reducing false positives. Um, Enabling broken payments to be repaired or be processed within that very fast instant payment time boundary. We see, every customer and across the world, customer due diligence is increasing. There's a greater need to kind of refresh KYC data. And as Peter's already mentioned, watch lists, PEP lists are changing all the time. So again, we see great use cases within that customer screening kind of domain. And then, I mean, moving on to AML, where we all know it's complex, typologies change all the time. The maintenance of AML rules is onerous and often needs a kind of hybrid of skills, business skills and technical skills. We see that, there's great agentic AI use cases around SAR content creation, triangulating that with regulation, SAR automation, so suspicious activity reporting, around anomaly detection using Gen AI, and equally managing those rules between the compliance person that understands the law, understands regulation, but is less technical. That's a great use case for generative AI, agentic AI, transposing natural language into complex rules. We see great use cases in trade-based money laundering, where documents are non-standardized, they're hard to interpret, but new techniques allow us to very quickly derive the important attributes of those documents. We see great use cases around scoring, risk scoring customers, and one of, this is probably not surprising, and we're all familiar with this through, we might have Microsoft Copilot or, Chat GPT on the side of our desk. But there are great use cases just for co-pilots for navigating the system, taking away the number of keystrokes you need to get to go between screens, but more than that, pulling together data across the system without having to go to different screens to do that, or to get very quick answers from the system. These co-pilots are proving super useful, super efficient, and really kind of driving that underpinning kind of efficiency within the compliance team. So I said a lot there, but to summarize, people thinking about this, think about your use case, be intentional, think about that path to live, think about explainability, and then, really to your first point, Irene, there is no shortage of use cases. I think what's incumbent on you is really to think about where you're likely to get the best kind of a bang for your buck, where you're likely to get the best return, and that might be driven by the biggest pain point, and pain points are different between institutions.
They have different needs and different expectations about what's needed. That's very good, Adam. Thank you very much for that. It was a very good explanation. We need to start wrapping up. So I would like to thank both of you for sharing your expertise, your insights today. I think it's very clear for all of us that financial crime is evolving really rapidly, and AI is helping, is creating a lot of opportunities, but at the same time, a lot of threats. Within this space, within this market, we're actually moving from what it used to be a reactive compliance to a proactive defense, from manual processes to intelligent automation, and from traditional methods to a future that actually is explainable, as you said, transparent, scalable, and AI can help us and can actually be our personal daily assistant to make our life easier. So banks that are correctly using financial crime and AI technology can remain compliant, can move faster, and they can outpace even the more sophisticated criminals. At this point, there are 10 minutes left, so I would like to try us to address some of the questions that we have here in the Q&A. So the first question is, and maybe Peter, I'm gonna come to you because you explained it about the human element of AI. Do you think that AI in FCM can replace a compliance team?
Yes, well, replace, no, I would say. I know that Adam's got some very interesting points about, beyond, say, the financial crime team. I'll focus just on the financial crime team for a moment. But within the financial crime team, I think we need to look at AI and the family of AI and the various tools there as additional members of a team. I think with the volumes that are going up and the scales of as we scale our institutions and all the activities, what may happen is it allow a bank to scale up their business without scaling up their financial crime team. So it's not about replacement at all. It's about augmenting. Using these either agents to augment the team and act as advisors and do the low value repetitive tasks to free up, as I said earlier on, to free up the humans to do the more complex decision and risk-based approach to what's going on. So I think that whilst there is possibility that there's less of a growth, I'm looking at AI, the AI family replacing humans in the compliance space. It's such a complex business. I believe that we're not going to be sitting here. Get me back and prove me wrong. But in 10 years' time, I don't think we'll be sitting here and there'll be a fully automated AI-driven compliance team and the chief compliance officer is a machine. This is just not going to happen. Not in my view.
Yeah, I mean, I think, Peter, I'd add to that.
Yeah.
Not least, as you mentioned earlier, there are some decisions that need humans. There's no world right now where that's going to be given over to automation. But the other thing I would say, I mean, just to kind of talk about our real world experience, is all of our clients that we've seen so far implementing this, taking advantage of this, really, it hasn't been about cutting roles in any respect. It's been about being more efficient and reallocating people that completely to Peter's point, may have been doing more repetitive, low value work onto that higher value work, which enables the bank to operate better, service their customers better, and just really kind of scale. So I'm really repeating what Peter said, but we see that real world evidence of the impact of these tools as they're getting rolled out. I think there is a more existential question in the chat. I've lost it now. I had it a minute ago. Oh yeah, one about unemployment and job displacement arising. I mean, listen, we're not here to talk about that. That's a kind of very macro question, and a societal question, if you like. And from banking and from the world that we look in, we're not seeing evidence of that right now. As we've just said, there is a broader existential question about the impacts of modern AI, and even just a chat before this, there's evidence that kind of entry level roles aren't as abundant as they once were. I think that's I think that's beyond our scope of conversation today. It is a societal conversation. I'm based in the UK, and it's a very topical conversation, actually at the heart of government right now. And again, to be parochial, but I can see our government are mobilising. They're implementing SARs that are dedicated to thinking about these questions, and they're talking about retraining people, and they're talking about the kind of potential societal impact of that. I don't think we can answer that, but I think what's encouraging is that we're seeing. I would have said a year ago, 2 years ago, governments were slightly unaware of the impact of these technologies. I can see kind of all over evidence that that's no longer the case, that governments have really kind of opening their eyes to this. And not least, Irene, you spoke about MAS and the regulators, the fact that, in the same in the UK, the FCA, the fact that, these bodies fully recognize the if you like, the enormity of these tools, and it's them that's driving the adoption, so they can do it with control. So I think there are indicators of the right the right thinking going on around this. Yeah, there are some very very interesting books. I would recommend Yuval Noah Harari if you want to dig a bit deeper on this subject. Homo Deus and Nexus, a very interesting if you like, thought experiments on the potential impact, future impact of AI and robotics.
We have more questions both in the chat and the Q&A. Sorry to interrupt you, Peter, but there are more things that we need to answer. If you want to make a statement and go to the next question.
Oh no, I was waiting for. I can see two coming, so off you go. I'll take it. The case investigations or the decision-making alerts. Off you go. So one of the questions was about automated decisions on alerts. Is closure permitted? The expectations around explainability. So as I was talking about earlier on, you can use AI to automate actions on your alerts, and the large client that we talked about, they definitely do that, so long as it's a false positive. So what you're doing is releasing something. So as I was saying, that part, regulators are completely fine about it. And when you're talking about something that's very obvious and is at a threshold that it's so obviously a false positive, you can automate and close and move that on. If a bank, so Adam showed the route to regulatory acceptance across those pieces, and full automation is one of the options there. You obviously need to always audit it. You need to be regularly checking that the agent's functioning as it should be, and you need to do regular updates and training to ensure that it's doing. But yes, you can certainly automate it in that perspective. And then the other question was about case investigations, where there's the boundary of automation and humans. As I said, you can't use AI to decide if you should or shouldn't raise a SAR or an STR, but absolutely you can use AI very, very efficiently to go out and do investigations, do adverse media checks, all of those things that need to be done if someone's raised a case of a suspicious payment or activity or loan application, and all of those pieces that are built behind it can all be done by an agent, and put all that information in front of me, Peter, while I'm sat there, and then I, as a human, could then take the decision on whether I do or don't raise that report to the regulator.
We have more questions on the Q&A box. Have you managed to see them? The first one is, to what extent can AI be leveraged in case investigations, and where should we define the boundary between AI-driven automation and human decision-making? Additionally, in which stages of the investigation process would the use of AI agent be more effective?
I think I've referred enough. When I've answered the first question, I probably covered most of that one in the second one. So yeah, the decision to raise or not raise, when you're investigating a case, you can get all the background information. So I think I did cover that one.
Okay. Is there any use case that Temenos AI replaced bank existing AML fraud systems?
Sorry, what is there?
It's on the Q&A box.
We don't look at so our AI agent or the various flavors of the family that Adam referred to, they don't replace systems. What we do is augment our existing suite of AML and fraud systems with our AI agent. So it's an augmentation. It's definitely not a replacement. It's an addition to what we already have.
Okay. There is another long question on the Q&A, if you can have a look.
Yes.
I would avoid to read all of it.
Yes, I mean, that's another kind of, if you like, existential question. Are we in an arms race? Dan is saying he attended a conference and was saying how, the same way, to paraphrase, the same way we're talking about, how we can use AI to be more efficient and to protect organizations, the bad actors can do the same thing. And also implying it's an asymmetric risk. Banks cannot afford to make mistakes. Bad actors, as Peter already mentioned, actually, bad actors only need to get one app fraud case right among 100, and they've had a result. Yeah, listen, it is an existential question. I would simplify to say, AML is always an arms race, if you like. It's always a game of cat and mouse. If you like, the financial system, the gatekeeper to you know, the financial system and economic country's economic kind of landscape are always a bit more reactionary to what's going on outside and what the bad actors, if you like, are up to. I don't think AI really changes this game. I think it's incumbent on all of us to be proactive as those gatekeepers. And I think for me, what's very encouraging is that, you know, regulators themselves, rather given all of the concern around fairness and bias and explainability, despite that, regulators themselves are actively encouraging adoption of new tools and techniques. I think one may have said that was unlikely a while ago, but really, you know, the fact that, you know, from the regulator's perspective, there's an active ambition to drive the adoption is a good sign. But I mean, the simple question: are we in an arms race? I think we are to some degree, and we always are, and probably always will be. I was going to say something else on that. Yeah. I mean, just to mention another good book, if anyone's read Andrew Burrows, he's a British guy. He's been working around this space for many years, and he thinks about AML slightly different to the convention. So, and he makes some fairly bold criticisms of the AML regime. I'm not here to do that, but his viewpoint is very interesting, and it's something that him and a number of people are championing to try and look at AML slightly differently, slightly more holistically, and slightly less reactive is the truth of it. But that's another conversation. So.
One last question, because time is up. Why are banks updating their systems now?
Simply because they need to. There is no reliant on batch. There is, there's no reliant on legacy. There's no reliance on siloed data, fragmented systems. More than ever, financial crime systems need to be agile, smart, real time, all of those things. If that's not too simplistic, we could take that one step further. Why is that? I mean, it's the reasons that Peter laid out in the outset: volumes, complexity,
efficiency,
regulatory scrutiny, all of those things. Maybe a good place to finish, I think.
A very good place to finish. I would like to thank you all for being here today. Adam, if you have one closing sentence out of all this interesting discussion, what would you leave our audience with? Just one sentence, short one.
Which I'm less good at. I go back to my previous point. Get on with it. Be intentional. Pick your use case, and start thinking about it. Start working on it. Start showing, proving a concept and value.
Go ahead, Peter.
Actually, it's ironic, isn't it? So I think mine's possibly similar in it would be similar in nature. I think I'll give an analogy. So it's a phrase I've used a few times, and Adam explained it. So AI there's a family of products there, and the way I look at it is it's like your family, right? AI is a family. As much as you might want to avoid it at times, you really need to embrace it. All right, you need to and it's something that you're going to have to get your arms around and work with, good or bad, and in the end it's always better.
Don't be afraid of the beast.
Don't be afraid of your family.
Exactly, family. Thank you very much. Very interesting question. Thank you, Peter. Thank you, Adam. I would like to thank ABA for hosting this webinar and all of you for being here with us today. It was a pleasure. Have a wonderful day ahead.
Thank you, everyone. Have a great day. Thank you, Irene, Peter.